Today, we leave the Golden State and head to crypto land, where things are getting very, very messy. There's a fight, a new love story, and the possibility of a solid financial return for the astute arbitrager. The saga began in April when Riot Platforms, formerly Riot Blockchain, made overtures to Bitfarms with the intention of buying the company. The directors of Bitfarms rebuffed the offer, and in scenes reminiscent of the 1980s film Wall Street, Riot went hostile and started to accumulate shares in Bitfarms on the open market. Rather than employing a poison pill, the defense preferred by companies fighting corporate raiders in the 1980s, Bitfarms announced on Friday that it intends to merge with Stronghold Digital Mining. The tactic seems to be that the enlarged company will simply be too big for Riot to take over. So, let's take a look at the numbers for the proposed tie-up between Bitfarms and Stronghold, and what return an investor could make. Then we'll consider how the machinations of Riot could completely scupper the deal and what the fallout could be. As always, if you find the content useful, I would be grateful if you would like the video and subscribe to the channel. The proposal outlined on Friday and agreed by the boards of directors of both companies is that Bitfarms will buy Stronghold Digital Mining in an all-share deal. The value placed on Stronghold is approximately $175 million, of which $125 million is equity value and $50 million is debt that will be assumed by Bitfarms. Stronghold shareholders will receive 2.52 shares in Bitfarms for each Stronghold share, representing approximately $6.02 in value at the time of the announcement, which was a 71% premium to the 90-day average price. Stronghold shareholders will own just under 10% of the merged enterprise. An arbitrager therefore needs to take a long position in Stronghold at the current market price of $5.42, short 2.52 Bitfarms shares, each with a market price of $2.44 for each Stronghold share, and then wait until the deal completes in February to receive their profit. When we plug this data into our spreadsheet, we can calculate such an investor can expect a return of 15.12% or an annualized return of 30.82%. However, due to the possibility of the deal failing because of the involvement of Riot, which we'll discuss in a moment, the risk-adjusted return is negative 55.46%. An investor should also be aware that, should the deal fail to close, they can expect to lose 50.3% of their capital. As I mentioned, this deal is a little more spicy than the others we have looked at so far. Typically, a takeover has two parties, but here we have a threesome, and one of the participants is becoming increasingly belligerent. Riot, which was rebuffed in April, didn't quietly skulk away. Instead, the company has been accumulating shares in Bitfarms in the open market, and now owns approximately 19% of all shares. This could mean Riot is in a position to scuttle the deal between Bitfarms and Stronghold, which significantly increases the odds of the deal failing. An intelligent investor will appreciate this isn't a risk-free trade. Not only do you have all multiple moving parts and hostile intent, you have the extra spice of this being a crypto deal, and as such, there is a significant possibility of a big capital loss. But an investor could make money. If an investor believes the deal between Stronghold and Bitfarms will close, there is a 15.12% gain weighting. And should the investor believe Riot will ultimately triumph and buy Bitfarms, the return could be even greater. It would be possible, should an investor believe both transactions will ultimately close, to take a long position in Stronghold without shorting Bitfarms as a way of buying Bitfarms shares at a discount, then holding those shares and tendering them to Riot at the second deal close, thereby earning a double return on capital. However, such a strategy is as risky as most investments in the crypto space and could wipe out a significant portion of the investor's capital should the deals fail to close. One would also have to question just how much Riot would be willing to pay for Bitfarms. At some point, the cost of the takeover would far exceed the replacement cost of all the equipment and technology they would be acquiring. What do you guys think of this takeover? Let me know in the comments, and don't forget to like and follow if you found this video useful. Be aware that all the figures mentioned are at the date of my calculations and will change in line with the share price of the company, any change to the takeover price, and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you, and until next time, enjoy life.